Welcome to the course. In this first lesson, we will answer the most basic yet most powerful question. What exactly is forex? Forex, also known as foreign exchange, is the global marketplace where people buy and sell currencies. Imagine you travel from Germany to the United States. You will need to exchange your euro to dollars. The rate you get, that is the exchange rate, and it's constantly changing. Now, in forex trading, people don't just exchange money for travel. They do it to make profits from those changing exchange rates. Traders buy one currency while selling another, hoping to benefit from price movements. The forex market is the largest financial market in the world, with over $7 trillion traded daily. It is open 24 hours a day, 5 days a week, starting in Sydney, moving through Tokyo, London, and finally, New York. Unlike the stock market, there is no central exchange. Everything happens online between banks, brokers, and traders across the globe. So when you hear something like Euro USD, it means you are trading the euro against the United States dollars. If you believe the euro will get stronger, you buy. If you believe it will be weakened, you sell. By the end of this course, you will not just know what is forex, you will understand how to navigate it like a pro. Now that you understand what forex is, let's talk about how you can actually access it. You can't walk into a bank and say, "Hey, I want to trade Euro USD." That's where brokers come in. A forex broker is a company that gives you access to the trading platform, a place where you can buy and sell currencies with a click. Think of a broker as your gateway to the forex market. There are two main types of brokers: dealing desks, which are the market makers. They take the opposite side of your trade. This means if you buy, they sell. They make money from spreads or your losses. Non-dealing desks is the second one. This connects your orders directly to other traders, banks, or liquidity providers. They are more transparent and ideal for serious traders. When choosing a broker, look out for regulations. Make sure they are licensed by a trusted authority like FCA from the UK, or ASIC from Australia, or CYSEC from Cyprus. You also need to understand the spreads and fees. The smaller spread, the cheaper your trade. You also need to understand the platform. Most brokers use MetaTrader 4 and MetaTrader 5. You also need to understand that you deposit and make withdrawal from your broker. Always ensure your funds are safe and easily accessible. Remember, your broker is your partner in trading. A bad broker can turn a good strategy into a nightmare. Choose wisely. So if you're thinking of which broker to use, I've provided a link to the broker that I trust in the description of this video, so you can go right there and register with my trusted broker. We have three types of analysis. Successful forex traders don't guess, they analyze. There are three types of analysis you will need to master. You will need to master the technical analysis. This is all about charts, price patterns, and indicators. You study what happened in the past to predict what might happen next. Tools include trend lines, moving averages, and candlestick pattern. For instance, let's dive into the technical analysis. Let's assume you have a market coming this way, just the way you can see right now on my screen. Alright? Now, considering a technical analysis, you're gonna get to understand that the markets, it was actually following this trend. Now, it has happened that when the markets reached that line, this line right here, it kept rejecting. So from the technical analysis, you should understand that when the market reaches this level right here, it has been respecting, it is more likely to come back to this downside. So, You use the previous things that has happened to actually predict what is going to happen next. So as we move on, you're going to be understanding technical analysis much better. The next analysis you got to understand is the fundamental analysis. This focuses on the why behind price movements. Things like interest rate, economic reports, political news are what drives your fundamental analysis. Now, this doesn't actually require you to go to your charts and look for what to do. Just when you consider what is happening in the global market, what is happening in the world, politically, economic reports, and interest rates, you'll be able to determine if the currency you are about to trade is actually gaining or it is weakening strength. Now, the next analysis you got to understand is the sentiment analysis. This measures the mood of traders. If most traders are buying a pair, that sentiment can drive price movements. For instance, if every traders are buying gold, for instance, that will actually drive the price of gold to buy. And if majority traders are actually selling gold, this will drive the price of gold to go down to sell. But the best traders combine all of these three. Fundamental tells you what to trade, technical analysis tells you when to trade, and sentiment tells you how strong the movement might be. The types of charts we have. To understand forex, you need to speak the language of charts. There are three main types of charts we have in the forex market. We have the line charts, simple and clean. It connects closing prices, great for spotting the overall trend. We also have the bar chart. This shows open, it shows highs, it shows low and close prices, giving you more details of how the market is actually moving. And the third one is the candlestick chart pattern, which is more used globally. This is the most popular used chart in the world. Each candle shows how price moved within a specific time frame, and the colors show if it's close up or down. Candlestick charts help you visualize market psychology, where buyers and sellers fought and who won. Once you understand the charts, you can start recognizing patterns, which brings us to the next lesson. Now, you got to understand the support and resistance levels, which is one of the most important parts of forex trading. Every market moves between invisible lines. We call them support and resistance. Now, let's look into support. Support is like the floor. When prices fall, they often stop and bounce back from that level. Let me give you a graphical example of that. When you look at the charts, most times the chart goes this way: up, down, up, down, up, down, up. Now, this level right at the bottom, where the market kept rejecting back to the upside, is what we call the support level. That is so simple and straightforward. The next on our charts is the resistance. Resistance is like the ceiling. When prices rise, they often pause or drop from that level. This is just the opposite of what I explained on the support level. For the support level, we talk about when market rejects from the downside. Now, for resistance level, this is where the market drops off when it's reached at the top level, like this. So this is what we mean by resistance level. So simple and straightforward. The next thing we're going to be looking at is why. Because traders remember this zone. They act as psychological barriers. If price breaks through resistance, that level can turn into new support and vice versa. Identifying this zone helps you know where to buy, sell, or take profit. We're going to be diving into all of this more deeper. But as a beginner, this is the basic things you have to know about trading. The next thing we're going to be looking at are the important chart patterns. Once you understand support and resistance, you will start seeing patterns in price movement. These patterns can signal the next big move. Some key ones include head and shoulder, signals a reversal. Price is likely to fall after forming the pattern. We also have the double top and double bottom. This indicates a change in trend direction. We have triangles and flags. This shows the continuation patterns. Price pauses before continuing its trend. Learning to spot these patterns gives you an edge. They are the market's way of whispering its next move. The next thing we're going to be looking at is the fundamental analysis. While charts shows you what's happening, fundamentals tell you why. Currencies move because of economic events, interest rate decision, inflation reports, GDP data, or political instability. For example, if the US Federal Reserve raises interest rates, the dollar usually strengthens because investors want higher returns. Every trader should watch the economy calendar. It shows when major news will be released. This helps you avoid getting caught in volatile spikes and also lets you trade news strategically. Finally, the part that separates professionalism from gambler. This is the risk management. Here's the truth. Even the best strategy can fail if you don't manage risk. Follow these golden rules. Never risk more than 2% of your account on one trade. Always use stop loss orders. Don't over leverage. Leverage can magnify both profit and loss, and you gotta stay disciplined. And avoid this common bigger mistake that beginners make. You can't be trading without a plan. You can't be chasing losses out of emotions. You can't be ignoring risk to reward ratio. And lastly, you can't be over trading. All of these things are what you should know as a beginner trader. Remember, forex is not a sprint, it's a marathon. Your goal isn't to win every trade, it's to protect your capital and grow consistently. Congratulations! You've just completed Forex trading for beginners. Now you understand what Forex is, how brokers works, how to read charts, and how to manage your risks like a professional. Your next step, start practicing on a demo account. Build consistency before going live. In Forex, knowledge is power, but discipline is the key that unlocks success. This is just the very basic part of Forex trading you need to know as a beginner. If you want to know deeper and really know how to start trading and make profits from the market, I do one-on-one live mentorship. You can use the link in the description of this video to register for my one-on-one live mentorship, and I'm going to put you through on how to be a good and profitable trader. Thank you guys for watching, and I can't wait to see you in my one-on-one live mentorship. Bye for now.